I think it's relatively unlikely at this stage, albeit just over a week ago, the Chancellor on a Mumsnet Q&A seemed to say that he wasn't implacably opposed to the idea that all options remain on the table. But the argument of the government as a whole remains that investment is incredibly important. And the reason why they don't want to whack this arbitrary tax on North Sea oil and gas, whack this a tax that is not predictable, is that there needs to be a very level and predictable level of taxation for that long-term investment to take place, for the renewable transition to take place and to enable UK energy security. That's the argument of the government. On the other hand, the Labour Party has been saying for quite some time now that none of these companies expected to make the level of profit that they're making this year. Without any brilliant move, the levels of oil and gas, the prices of those have gone up without any sort of business nous from these companies. So why should they take all of these profits? Although I suppose on the other hand as well, they have made big losses in previous years as well. So sort of swings and roundabouts there. As far as the Chancellor has been saying, he's saying that this remains on the table, but he doesn't want to go down this route because he wants to encourage that investment. So it remains almost as a bit of a threat to those companies. If that investment doesn't come about, if we don't see a greater investment, particularly in renewables and our own energy security, then it remains something that could be used, although the government is sort of steering away from that at this point.
Yeah, just ignoring for a second the practicalities of it. I mean, The Guardian's own finance editor said that it would only raise a modest amount of money. The optics of it, there's two ways to look at it if you're Rishi Sunak. It looks great and it's populist, it'll raise a bit of money. You know, the big, horrible oil companies, they're losing some money and you're giving it back to the people. Or the other way to look at it is you're raising another tax. And I've already got a reputation for tax raising when I keep telling everyone I'm a tax cutter.
It's interesting, actually, the Labour Party in the local elections pointed to the overall tax burden as something that was dragging this country's growth potential. Well, the tax burden grows if you tax anything. It doesn't just grow if you tax individuals. It also grows if you tax businesses. And ultimately, taxing businesses are made up of individuals. It's a sort of a legal fiction, a company. If you tax that, ultimately, that tax falls on something in the end. And that will fall on wages, and that will fall on prices, or that will fall on investment. And the judgment, it looks like, of the Treasury is that a tax on these oil and gas companies would fall on investment. And that might be a bit of a worry in the future for the UK's energy security.
Yeah, obviously, lots of reflections today on what was said at the Treasury Select Committee by Andrew Bailey, the Governor of the Bank of England, yesterday, pretty much saying that his hands were tied. There was only so much he could do to cope with external factors. Is there more that the Chancellor could do? And I know we've talked about windfall taxes, but could he be cutting taxes at this point? And there's no plans, we're told, for an emergency budget, but we're constantly talking on this programme about whether or not to cut tariffs on food, whether or not to cut VAT on fuel, for example, those green levies on bills. Why aren't these all being discussed or considered by the Chancellor? If he's opposed to raising taxes, why won't he be open to perhaps cutting some?
Well, it's interesting. There's the big worry about inflation and whether this is demand pull or cost push inflation. Fiscal transfer to some degree might be actually counterproductively inflationary if you might put more money, increase the money supply or put more money into people's pockets by a bad degree. That could actually push prices up further, even though it sounds like a good thing to do. So there are some worries there. But also, we know there have been discussions in Cabinet about, for example, taking off those tariffs on goods that we don't produce in the UK, about potentially bringing forward that income tax cut that is due to come in 2024. There are these discussions taking place, but equally, there isn't a big fiscal event scheduled until the autumn, and that really is going to come about when the price cap for energy is re-evaluated, because that's a 6-month cyclical event. So the next time that event is, that'll sort of be timed for the next Treasury statement. So maybe there'll be some moving there. But as things stand, really what we have been hearing about is not particularly that big set-piece fiscal event to help out, but more tweaking around the edges. And you're right, the Bank of England has been saying for some time that this will be a transitory phenomenon. The Bank of England said it would peak at 5% inflation in this country. Well, we're already long beyond 5% and now we're expecting to get into double figures. It has to be said that central banks around the world did not see this coming. It's quite remarkable that the Bank of England has come under actually a little bit of political attack now as well, because it has basically one job, which is to keep inflation down to 2%. And whichever way you look at it, it did not see this inflation coming, and it has failed to deal with this inflation with historically low interest rates for the past over a decade now. And that has come under some political criticism yesterday.
Yeah, do you remember that, the days of inflation targets of 2%? Those were the days, weren't they? Hi, Tom, good to see you this morning. Thank you.